This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
It's great to have your company here on Business Now. Let's go around the country and see just how home auctions held up, especially after the Reserve Bank didn't cut interest rates last week as expected. Well, around the country, there were 1,297 auctions, and that is pretty healthy. 68.2% of those up for auction were sold, and that is extremely healthy. In Sydney, there were 470 auctions, and around two-thirds of those was sold. In Melbourne, even better, 467 auctions. The clearance rate was above 72%. Brisbane also strong, 56 auctions, a clearance rate there of 64%. In Adelaide, 59 auctions, and almost 85% of those were sold. It's been strong in Adelaide for a long, long time. And in Canberra, 46 auctions, 76% were successfully sold. So let's bring in here Anne Flaherty, economist with REA Group. Anne, always good to chat to you. Just explain to me, won't you, that the auction clearance rates, they are strong despite what the Reserve Bank did, and yet it says it will continue to cut interest rates in the future.
That's absolutely right. You know, it was an interesting weekend to watch, particularly off the back of that surprise decision by the Reserve Bank not to cut rates. As you said, the clearance rates have been extremely strong, not just on the weekend past, but really over the past couple of months. We've been steadily seeing those clearance rates climb, and for quite a while now, we've been seeing some very strong results. Particularly in markets like Adelaide and Melbourne and Canberra, we've been consistently seeing these clearance rates above that 70% level.
Okay, so where there are clearance rates above 70%, you generally start to see prices improving. The demand for properties is greater than the supply of housing broadly that's on the markets. So that really is a trend for rising prices in the future.
Definitely, and even without an interest rate cut in July, I think that we will continue to see those prices rise over the month. If we look at what happened more recently in June, we had some pretty strong price growth figures in every capital city around the country. And, you know, expectations are that we will see an interest rate cut in August. Of course, you know, with what just happened, that remains to be seen, but those are where we're expecting to see rates go. So if rates do move lower, if that demand remains strong, we would expect to see those prices move higher by the end of the month, by the end of the next few months as well.
Okay, so there's demand is strong, but the question about supply comes into it. There's not a lot of cranes around our capital cities right now, so that says there's not a lot of apartment building going on. Then on top of that, there's also this latest Treasury sort of leak of information, which says the government is way off target in meeting its 1.2 million homes being built by the end of the decade. So that suggests that supply is not as strong as the demand out there.
It was very interesting to see that leak. It's not surprising in any way. I don't think any developers, any economists out there think that we have a hope of building that 1.2 million new homes. I think it is driving a bit of FOMO in a way, because people are expecting that housing supply issues are likely to become worse over the coming years. With interest rates coming down and prices continuing to climb, I think there are a lot of people out there who are saying, you know what, I probably should try and get into the market sooner than later. If we look at the total number of homes on the market at the moment, it is winter, which is one of the quieter times of the year, and we are down slightly from where we are a year ago. And I think that that is one of the reasons, when I say down, I should say down in terms of the supply of properties coming up for sale. But I think that with that FOMO, with those price growth expectations, that demand is going to remain really quite strong. And I think that for sellers out there, that's actually quite good news.
And it's even driven by things such as even changes to superannuation and capital gains tax. It's even driven by, say, for example, the potential for what comes up in this economic forum of the Prime Ministers, where there could be likely flag changes to negative gearing. All these things have an impact on people saying, hang on, maybe we need to jump into the property market now before any changes take place.
It's a good point, and we often do see people make decisions like that. I think particularly if we look at superannuation, there are growing nerves around what could happen with the tax settings there. For people who are looking at property as a wealth creation tool, you know, if we look historically, it's been quite effective for most people. When we look at how much prices have moved in certain suburbs, the actual dollar gains that we've seen have been astronomical in some places, particularly, you know, within Sydney. In some cases, we see $100,000 gains in the median price of a property in a 3-month period.
It is quite astonishing, it really is. So we'll keep an eye on all of that. And Flaherty from REA Group, always good to chat to you. Many thanks for your time today.
Thank you.